Good evening, everyone. I'm CS Swati Panchal, moderator of this webinar, and I'm delighted to welcome you all on this webinar being organized by CPE Committee of ICI. It's a great pleasure of mine to be a moderator for this webinar on recent important judgments of GST and income tax. In a short while, we will start this webinar. First, I would like to appraise about the CPE Committee. The profession of CA is going leaps and bounds. Its phenomenal growth has brought the professions at the forefront. Today, our profession has acquired indispensable positions in the business and economy. ICI continuously aims at developing knowledge is so that the members stand out to the expectations of the society. To achieve this objective, the CP Committee of ICI has been continuously striving for the perfection, integrity, and knowledge, which make the world CA synonymous with excellence in the service. In these directions, the CP Committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CP programs and providing adequate opportunity. Now, for this evening, we have the two sessions, 1 hour of each, and the topics important judgments of the GST and recent important cases into the income tax. So, in absence here of Vice Chairman Gyan Chandra Misra ji, he's the Vice Chairman of the CP Committee and the Chairman of the Insolvency Committee. I acknowledge his absence and regards to him. I would like to introduce C.A. Purushottam Khandelwal ji. He is the Chairman of CP Committee and Convener of RBA Director of ICI. He is having 25 years of post-qualifications experience in the field of audit, direct and indirect taxations and intellectual property rights. So this year he is devoted to fortifying the CP framework and guaranteeing the quality across its entire operational spectrum. And this year major focus would be on the upgrading of CP portal for the enhancement of the branding and professional competency for the members. With these short introductions, I would like to invite Sir C.A. Purushottam sir for his opening remarks. Sir, over to you.
Good afternoon, respected faculty. For this first technical session, my friend, philosopher and guide, Nitin V. Patak, under whom I work so many years in the Ahmedabad branch managing committee, moderator of this program, and she is also very good faculty, Swati Panchal, office from the CP committee, and respected my chartered accountant friends, brothers and sisters. It gives immense pleasure to be amongst you on the CP seminar, which is organized by CP committee every Wednesday from 4 to 6 p.m. My committee is dedicated to sharpen the knowledge of members, because what we are selling our services, and I'm in the opinion that the members should update every day, because whatever you learn today may be outdated yesterday. Yesterday you learned, today may be outdated. So every day you are learning new things. Latest development ICI. Yesterday, the president of ICI, Ranjit Agrawal ji, with the immediate past president of ICI, Aniket Talati ji, we meet to the chairman of IFSCA Gandhinagar to submit a report on developing GIFT ISC as a global finance and accounting hub, because the president of ICI, Ranjit Agrawal, is the chairman of IFSCA Expert Advisory Committee, and we are a knowledge partner of IFSCA. So there is a lot of opportunity in GIFT City. So yesterday we have submitted a detailed report to the chairman Raja Ramanna. So members, those who are looking for the development of the professional or their own practice, they may think over. And once those who are not visited GIFT City, please go and visit the GIFT City. This year, my committee is dedicated to bring our technology in the CP committee. We are thinking that your attendance will be marked by mobile into auditorium or a hall. We will display one code in the programs, and as soon you upload this code in the mobile app of the CP committee, you will automatically mark your purchase. There is no 3-year rolling period of CP compliance. This year you have to compliance CP in the calendar year. same calendar year, and still we are last year we also not did the increase of compliance of CP hours, and I'm the firm opinion that this year will also be not increase the compliance of PP hours. So those who are not attending the CPA, my humble request and full request to please attend the CPE programs to compliance your CP compliance. This year we come with the some consequential effects of the for those persons who are not attending the CP program and saying institute kya kar lega. This year we are also coming with the penal provision those who are not attending the CP programs. So please visit the website of the CP committee. I will not take much of time because the Nitin Bhai is an expert in the subject. He is really thoroughly explain you the latest judgment of the GST. So I hand over to Swati Ben for the process. Thank you, Swati Ben.
Thank you so much, sir, for sharing insightful knowledge and also the steps taken by yourself and the committee and ICI to enhance the knowledge and also the recent updates in the new city. So I would like to invite Nitin sir, and before that, I would like to give the brief introduction. Sir has completed his CA in August 1985, have more than 3 decades of professional experience. He serves as a faculty for the DISA, DIRM at ICI, SPIPA, Government of Gujarat Institute, and at the Bankers Associations. He has also delivered various lectures at different forums on taxation, audit, MS Excel, CAD tools, as an audit tool system implementation. With these warm words, I welcome you, sir, for sharing your insightful knowledge on the recent updates on the GST. I welcome you, sir. Yes, sir, your presentation is visible.
1 second.
Yeah.
Okay. Now voice is clear. I'm
Yes.
audible.
Yes,
I'm
you are
audible. Okay. So thanks for inviting me on the subject of GST. Thanks for Purushottam Khandelwalji. Thanks to young, energetic Swati Madam, Swati ji. Today I'm going to cover the GST High Court and Supreme Court judgment. This PPT is lengthening around 227 slides, and I'm not going to finish all the one, but I'm going to talk about some of the judgment which you will be able to use it in your personal life. 1 second. I'm just hiding floating control. Second. Okay. Swati, am I able to be audible very clearly?
Yes, audible
Yes, you
clearly.
are audible. But if
Okay.
it's fine, if you speak a little bit
Okay,
louder.
because once
Yeah.
I'm not getting your voice clearly. Okay. But you are getting my voice clearly?
Yes, your voice is coming.
Yes, okay. Okay, done. Let me finish like a monogram. Okay, I'm speaking and you're listening. Okay, and thanks to CP Committee Spaces, thanks to Purushottam ji, thanks to Swati. My any question relating to important judgment on GST, you can email me, you can WhatsApp me. This is my address, this is my blog address, and all this PPT would be available in blog also. Okay. Today I'm going to cover one of the aspects is procedural aspect. Procedural aspect is covered under section 73, 74, rule 142. 1 is DRC1, DRC2, DRC3, DRC4, DRC5, DRC6, DRC7. What are the stages? In income tax, there is 143, 1A, 2, 3. And here in this, there is a statement of facts, then comes an or like a SCM, and then comes an order. So procedure covers like this statement of statement, then SCM, then order. And I will cover that. Then one comes block credit, one is covered ITC, one is attachment. 1 second. The one is block credit. કોઈને સાંભળવું કે બરાબર સંભળાય છે કે નહીં? Block credit, one is ITC. A block credit means the Broke credit means the credit on which the ITC is there, but it will not be entitled to. There is a judgment in which one hotel was built by them, by the operator, by the क्या बोलते हैं, contractor, and his credit was not given, and it is covered ITC attachment of the property. Generally, your property is attached of a client and the relative. There is this thing, but there is a limitation on whom the attachment of the property can be done. There is a section which I have covered, search and seizure. When there is a search and seizure, there are certain limitations by which they cannot ask you to file DRC 3, DRC 4, SEZ refund. In case of SEZ refund, once you apply, it is deemed to have been granted, and within 60 or 190 days, if the refund is not given, you are entitled for a refund with interest at the rate of 6%. Before that, there are a number of Supreme Court judgments under the old regime, which is equally applicable to here, where there are many cases when GST number is cancelled, they're not allowed to make an appeal. An appellant order usually time barred. The High Court judgment says that under Article 226, there is a question of livelihood. Even if it is time barred, you are entitled to have it in your history directly. So this judgment would be applicable in case where when your GST number is cancelled suo moto, you are entitled to restart it. With this, I'm going into the particular case study. This is a case 153 Taxman 548, Punjab and Haryana. Modern Insecticides Limited versus Commissioner of CGST. Petitioner were asking, for direction. The respondent have collected 2.55 crore and supply of punch number were not given. The officer responded, search the factory. I'm not going into the details of the case study because it run into at least 15-20. But I will cover the section which will enable you to understand the procedural aspect of CGST, qua 73, 74, 75. On 1st March 2020, the respondent searched the factory premises of the premise petitioner and resumed the entire the proceeding were taken. They were asked to deposit 39.15 lakh. In spite of that, they have not gone into the stock taking properly. Again, after a lapse of around 10 months, they again did a search on 15 January 2021. They took away the director whose age was around 78, including the Shahil Sharma director until 1 p.m. And the money was, he was asked to reverse the ITC. And this is the typical case. And there was one case, Bhumi Engineering. Bhumi Engineering of Gujarat High Court, where Gujarat High Court, Dr. Judge Karia have given a guideline that during the search, if any money is paid or if any ITC is reversed during the search, it need not be considered as voluntary even if the DRC3 is issued. Number two, if during the search, after the conclusion of search, if anyone wants to make a complaint against any officer, then they can make a complaint against the officer and the penalty and the disciplinary action would be taken for any harassment done by that. And the same is accepted and the same is implemented in Vallabh Engineering. In this case, also in modern insecticide side, on the basis of this Gujarat Bhumi Engineering was noted, and the refund, the tax paid of 39.15 lakh, and the other one amount into rupees 2.54 crore has been refunded with interest. And there are n number of procedures followed. But to understand the procedural aspect, I'm going into section 73, 74. This thing. I'm not covering this slide. Now this non-suppression of cases covered under section 73, suppression of cases covered under section 74. What do you mean by suppression? What do you mean by non-suppression? There are three conditions which are here. The 73 section 73 means there is determination of tax not paid shall be erroneously refunded. Input tax is wrongly available utilized for any other than fraud, willful misstatement, or suppression of facts. 73 means suppression of cases where facts are very simple and and the taxpayer has not made a misstatement, a willful misstatement. He has not done a fraud and has not suppressed any facts. So in these cases, there is no penalty. I'm going by exactly the procedure followed now. What procedure is not followed and why in this modern insecticide the case was reversed because of the process not followed. So this process is most important and mostly followed. But if it is not followed, the whole case vitiates and the judgment would come in your favor. In this case, first number one, taxpayer would be informed about the discrepancy notice in the tax payable by them. Either it is like tax ITC or either rate, sales, purchase, rate, everything would be covered by the discrepancy. And this discrepancy would come through the return filed by you. The ITC, matlab reverse somebody is there, someone else return which ITC is reflected, is not reflected, or certain information is there, the taxpayer would be intimated about the discrepancy in Part A of DSC 1A. Once DSA 1 is issued to a taxpayer, and taxpayer say there are A, B, C, D, E discrepancy found, and taxpayer says that ABC is okay. Whatever the taxpayer will pay the tax with interest in DSC 3. So what is the situation? So what are the fees? There is a statement supplied by the department. Then there would be a SCN. Then there would be over. So what is the stage? Pre-SCN order is. What is that? Pre-SCN, they would issue a notice, the DSC 1A, DSC 3 means you accept. Once you accept, DSC 4 would be issued by the department saying that it is okay. Then comes DSC 5. Okay. Okay. Then order. What department will do on the basis of the statement provided in 1A, they would conclude the order proceeding under DSC 5. So ABC is covered, DEF running. The order will be conducting, an order would be issued under DSC 5. And DSC 5 means in these, if you want to make a representation, you are entitled to make a representation in DSC 6. Now, during DSC 3 and 4, certain other things are added, then you have an untitled. So F and G is added. Now you will make a representation here at this stage in DSC 6. DSC 6 means you are contesting. You are not accepting ABC. ABC you accept, E you don't accept. Now you are making a representation on the basis of representation made by you. They would issue SCN in the pre-SCN under DSC 7, the summary order. The above order will be uploaded to the portal. So DSC 1, DSC 3, 4, now DSC 1. Okay. Disputed liability reply to department in part B of 01A. You would reply on the basis of that summary of SCN would be issued in DSC 1 and summary of statement would be in DSC 3. and on the basis of that, order will be passed under DSA 5. Order concluding the proceeding. DSA 6, you have been entitled to make a representation. That is what I call ABC, DEE, DE. You are entitled. Order would be passed before draft order. You would be entitled to make a representation to DSA 6. On the basis of that, summary of order would be uploaded in portal DSA 7. Above order should be made within 3 months, 3 years from the date of annual return. Say, for example, 31st March 2024. Due date of filing annual return is 31st December 2024. Before the conclusion of 3 years, 31st March 2020, this order should be passed. And notice should be issued within 3 months, before 3 months of the this thing. Okay. So clear? Yes, no? A second, one second, I'm going. Okay. So this is clear. DFC, D part 1, DFC 1A, DFC 3, DFC 4. Then you again entitled for the student to reply part B of DSC 1A, DSC 1, DSC 2, DSC 5, DSC 6, DSC 7. Now, in case of this notice would be under section rule 142.1 to 1A 735, 142.2, 736, and this other section. But now I am coming into penalty section. In 73, there is no fraud, no visible misstatement, no suppression of fact, and there is no penalty. In this case, in section 74, there is a willful fraud, there is a willful misstatement, there is a suppression of fact. The resulting in 15% of the amount is to be paid before issue of SCN. After at the stage of SCN, 25%. At the time of SCN order pass, 50%. If you pay after 30 days of this order, 100%. So 50% pre-statement. Before issue of SCN, 25%. After SCN, 50%. If you don't pay within 30 days of SCN, order passed, 100%. 15, 25, 50, 100. Order thayani before with 30 days of the order. If you make the payment, there will be 50%. After the SCN issue, 25%. Before SCN, 20%. Before SCN, 15%. This is the section which we have covered here. Now, I am not going into section 73, 74. I am going directly into the judgment now. Okay. Here, what happened? This is a case in which this person has been denied SCN, denied ITC on the ground that three of the person whom he has dealt with is a fraud. And they have made a statement, what they have covered. In whatever week 73, 74 was, they have issued they have made a search and survey, they have taken away the file, and at the appropriate time, they have replied. Party was very good because its turnover is more 120, 131 crores. The rollout, there is an ITC available. Pre-ITS, there are only 2 stages, but after the ITS, there are 3 stages. The supplier of a return was filed, and in this case, this person has for every ITC claim, he has got purchase order, purchase bill, ITC, GSTR 1, GSTR 3, as they have filed a return. It's seen in the portal, credit is there, eBay bill is there, truck is there, goods received is there, everything is there. Because this is a on-file officer responded, search the factory devices, and take over the document, Patnama was produced, stock, they have been asked to pay 34 lakh, 34.4 lakh with penalty of 5 lakh, and under the pressure they have made the payment. Violated by 12th March 2020, petitioner had made a request to respond to supply different document is not provided. 16 January, they asked the various voluminous documents. He has produced all the documents which were available. Certain documents were not available. He asked for a preventive measures again. The petitioner submitted all the documents relating to that. The petitioner further prayed that supply of original documents not by petitioner respondent. issued summons on 20th December 2020. The director, they have taken away the money. They responded whatever that they purchased the goods from Ralph Bestegro United Chemicals, and the three entities were cancelled dealers. The petitioner, those of the basis of these three things, these three dealers, they say they are supposed to make the full payment. The petitioner was liable to make GST input on the basis of this. Now, as the petitioner was involved in respect to purchase of approximately 3.77 crore in the electronic ledger, credit was lining was reversed. The responsible was director to reverse the entry. DRC 3 was they reversed to DRC 3. Now, as I've explained the procedure, DRC 3 was issued, but DRC 4 was not issued. These are the government, the High Court has asked to make the payment, reverse the payment with interest at the rate of 6% on the two faulties. DRC 4 was not issued for one, and Bhumi in Supreme Court, High Court, Gujarat High Court judgment, and the condition issued that during the search and seizure, you cannot you cannot ask the party to make payment, and you cannot ask party to ask to reverse ITC. And if it is done, Bhumi is not followed, and you're supposed to make payment back. So these are the two grounds. This is a huge, huge judgment. I am not going to cover in detail because it is a huge judgment. Okay, with this copy of Panchnama, this thing, but I will cover the last slide for this thing. When this case was taken up for hearing on 21st March, the direction was responded. The High Court says, explain the reason why DSC was not issued the petition. So they have given this explanation. London Council for the 74, they said that assessment is on the completion stage. Thereafter, Rule 42 provides this thing. Further was likely to inquiry procedure. The short question for considering this petition, whether the amount paid by the petitioner on 16 January 2021 could be retained by without SCN after the expiry of 2 years. The court says like this. As per the procedural section for subsection 5, it shows that if any person chargeable with tax wants to pay the amount of tax along with interest before service of notice at before on his ascertainment or tax as ascertained by the proper officer, then he can deposit tax along with interest and inform the proper officer of this thing. 74.6, the proposal of receipt of such and shall serve a notice. This thing. 74, 76, 74.9. The above provision of section 74 have been examined by the Delhi High Court in Vallabh Textile, which is available in that case, Delhi High Court. That amount of rupees 1.80 crore was deposited on behalf during the search proceeding carried out on 16th and 17th. The question focus is whether the deposit was voluntary or not. During the search, the officer of the company was detained for several hours, and only when he appended the signature of the document. The Delhi High Court examined section Rule 74.1 and Rule 142, which I have explained in detail through chart. Okay, and I've taken 5 minutes to examine the same. So if this DRC1, DRC2, notice 1A, 1B, if you followed, if it is not followed, this is exactly where the department is making a mistake, and there you can use it for the purpose of your benefit. The court also examined 25 March 2020 CBIC. The inspection were of the view that Gujarat High Court Bhumi Associate versus Union of India, as per the inspection, no recovery of tax should be made during search, inspection, investigation, unless it is voluntary. As per the judgment of Bhumi Associate, even if the assessor wants to make a voluntary payment prescribed from DSA 3, he should be advised to file the same day after the search is ended and they could have left the premises. The above inspection observation will be made so that unnecessary cost to the assessor. Delhi High Court, while allowing Delhi High Court, Vallabh textile is observed the deposit of tax made by the state during search was not voluntary and it was without provision of Section 34. And the same rule in modern insecticide, the respondent were directed to return the amount along with simple interest at the rate of 6% from the date of deposit till the date of payment. So this modern insecticide cover what we have covered 73, 74, DRC1, DRC1B, 1, 2, 3, 4, 5, 6. SCN and what are the penalty provisions 15, 25, 50 and 100. So this section I have taken half an hour for this, but on the basis of this you can do so many things. Now this is a provision. This is a case in which one hotel at Agartala was built by SR Construction. SR Construction, what he did, SR Construction take a wholesome contract for building in Agartala at Agartala the hotel. He has taken an interior as well as whole building was built by them, and his SR product was not given by the ITC on the basis of considering that it is not available under Section 17. And so that I have explained the Section 17 and why it was not covered by the block credit. And what is I have covered the block credit Section 17 also here. Okay, let me go through this Section 17. Paper is available with me or not? I don't have Section 17 right now in my hand, but I have written here. I am covering this here. Okay, no problem. Uh, uh, so I am covering Section 17. Now, what happened in SR construction? Hotel was built by SR construction, and whatever ITC is claimed for the for the making of this hotel, he has given a contract to was subcontract for say material, labor, architect, interior. There are so many other consultancies he has borrowed, and on the basis of that, ITC was claimed. They said that you have constructed the building, you are not entitled for ITC, but should explain in detail why ITC was available and what are the section 17, schedule 2, schedule 3. This section, if you go through, you would have a lot of clarity why this case the ITC was allowed and why the department is not allowed. Okay. So now what is now I'm going into this slide. Goods and services. If any ITC is used for the purpose of business, you bought a goods or services used for the business purpose, it is allowed. If it is not business purpose, not eligible. Goods and services applied for taxable services, you have to use for the business purpose. Taxable services plus zero rate services eligible. If it is used for exempt outward services, not eligible. Clear? Yes, no? Only attributable to this is already covered in the next slide, so I'm not covering this. Now these are blocks. Motor vehicle, food, beverage, membership, free, rent a club, travel benefit, work contract services when supplied to contract of an immovable property. Suppose I make an immovable property for myself, I will not be entitled for whatever ITC, whatever ITC, whatever the whatever tax I have paid for the purchase of that goods. 100 plus 80 purchase account debited, GST account debited to bank for the purpose of making an immovable property, and I'm using for my purpose. It would be coming under block credit. Motor vehicle. I'm not going into some of the clauses, but because I've got only 5 minutes to cover this case. Goods services, both are received by the taxable person for construction of everybody for his own account. Goods services, both of which have been used, say, composite scheme. You purchase a goods or services from a person who has chosen a composite scheme. Goods are both received from a non-resident person, except goods for imported by. I have purchased a goods, received, paid more goods or services, both received by non-resident taxable person, except when goods are imported. When I'm importing the goods, it is not coming at a non-credit. Otherwise, it is coming at a block credit. Okay. Goods or service to use for personal consumption, goods lost, stolen, destroyed, disposed of by the way of gift or free. And it takes 74 means suppression of fact, 129 search and seizure, not covered. Now, this is a case in which in Agartala construction activity was taken, works contract services was taken for the purpose of construction. Construction include reconstruction, addition, renovation, repair, and alteration. For the purpose of land and building, civil structure, telecom towers, pipeline, and factory premises. So in Hotel Agartala, it was covered under this works contract. Okay, yes, he has given a works contract. Is it as a construction? Yes, construction include this. Is it for the purpose of land and building? It is capitalization book? No. It has been this thing, and that's why it's not covered. Capitalization books, expense in the books. Plant and machine apparatus, equipment, machinery, foundation, basic structure. For further supply of works in goods, services, ITC admissible. Okay. So for further supplies, because I have not used work, I have supplied to the hotel company. Hence, I will entitled for. I have covered this. This is clear. Yes, no. For plant and machinery, there is an exemption. If I, as a circle section, has not used for his own consumption in his books of account, it will be debited to expense account. Hence, it is available. In case of hotel, it will be building a structure. So SR construction, it would be in expenses in this thing. You would have a receipt in profit loss account from Hotel Agartala company. And in SR construction books of account, all the payment by 100 plus 18, whatever may be, it would be allowable. 200 which he received is debited to his profit loss account. If in the case of Hotel Agartala, it would be capitalized. Hence, this slide would make it clear. But now this slide is covered for actual presentation, but why actual entry in the books of account. But I'm explaining you in in the law also how it is there. This is covered goods or services. Both are used by registered person, partly for where goods or services both are used where goods or services both are used by registered person, partly for the purpose of business and partly for other purpose, the amount shall be restricted to credited to institute receivable for the business purpose. So I have bought a laptop of 1 lakh, 18,000 is the GST paid, and my son is using for his study purpose, say 50 times he is using it, so 50% I am not using, hence under section 7 in 1, 9,000 ITC will not be available to me. Where the goods or services both are used by the registered person, partly for affecting taxable supply, including zero supply under this act, under the IGST, partly affecting exempt supply under the said act, the amount credit shall be restricted to so much amount attributable to taxable, including zero rate. So if I am using for exempt supply, so 100 plus 50, 100 for taxable supply, 50 for zero rate for the exempt supply. So one third would be disallowed under section 17(2). The value of exempt supply under section 2 shall be such as it shall include supply in which receiver is liable to pay tax under RCM. Under RCM, if I'm paying tax, it will be not be available for it would be coming under block trading. Transaction of security, sale of land, sale of land. If I'm selling a land for exactly land, it will not be liable for GST. Okay? Because and the same way, I'm explaining. Suppose I'm buying it from a builder a flat or an office. Okay, let's take an office. Okay, I bought an office, say 100 rupees, say 1 crore, and I bought it after the BU permission or first use permission, and I made a whole payment after the BU permission or first use permission is received. In that case, it will not be liable for GST. And if you go into section schedule 2, paragraph 5, subsection B, which says that it will not be liable for GST. Okay, I'm going into schedule 2, schedule 5 to phase B. Okay, this section, this will make you clear why Why section is applicable? What for section is other? I'm covering the schedule 2 and 3 in a short time later on. Schedule 2, paragraph 5, clause B. This will not be available. This will be covering under block credit because it is not at all. The value of exempt supply shall be such as may be shall include supply and receivable liable to tax overseas transaction this thing. Now 1, 3. For the purpose of this subsection, value of exempt supply shall not include the value of activity supplied as schedule 3. Schedule 3, which I am covering, schedule 3 is a services supply, which is exempt, which will not be considered as, as transfer under the GST norms for goods and services. I am covering schedule 3 here also. Shall not include value except the value of activity or transaction, specific paragraph 5, and the value of activity granted value of such activity or transaction. This is covered under schedule 3. The value of it was specified in paragraph B of the said schedule in the clause of value of such activity as may be prescribed in clause A, paragraph 8 of the said schedule. I am going into schedule 3 for this thing. Okay. So this will be this apportion would be accordingly. A banking company, there is a provision of 50-50 would be allowed unless it is accepted by them. Notwithstanding, now this is the section under section 75 and 17 notwithstanding anything contained. So 17 subsection 5 subsection C says that the IGST will be available to the person is who is like an SR construction. Notwithstanding anything contained in subsection 16(1), subsection 18(1), the input tax shall not be in respect of the following: works contract when supplied for construction of an immobile property other than plant except with input or service for a work contract. The works contract services when supplied for construction of immobile other than plant except these are when the input service is further supply for trade. So this says that section 17(5)(c), notwithstanding anything contained in these two sections, it shall not be available in these except, namely, when the supplied construction for immobile property. In this case, SR Construction had done a works contract for immobile property other than plant and machinery, except where it has been an input for further supply working. What SR Construction was uses it to supply to Hotel Agartala. Hence, it will be available as input tax credit. This is section 17(5)(c), which is also supported by schedule 2, paragraph 1, 5 clause B, and which is further explained in schedule 3. Okay, I'm going there also. Okay. This is already covered. What are schedule 3? These are the activity or transaction which will be treated neither as supply nor service of goods. Service by employer-employee. Tribunal service is the function of MP. MP performed by hold any post of a provision of constitution. The duties performed by a chairperson, member of directors, body of central government. Service of a funeral, burial, sale of a land. Now this is sale of a land. Subject to clause 2(5)(b). This what is scheduled for clause 5(b) says schedule 2 paragraph 5(b) says that when you sell a building or any land or any building or apparatus thereto, if the BU permission is received or first use permission, entire consideration is received after that. Hence, this
Sorry to interrupt, but many
other
of
than this would be covered. This will not be covered as a service. What schedule 2 says? What schedule 2 says? Schedule 3 says these are not activities to be considered for the purpose of. This will not be liable for any GST. What are the provisions? What they said? Services of an employee, service of a tribunal, service of an MP, including service of a funeral, actionable claim, other than specific supply of goods from a place in non-taxable territory to another nation. Suppose I am supplying goods, my goods are not in Indian territory, and I am selling it to non-Indian territory. Then it will be exempted. Supply of a warehouse. Suppose my goods are in custom warehouse, which would be considered as a non-Indian territory, and to any other person before I brought it for home consumption, it will not be. It will be covered under Schedule T, and no GST would be applicable. Clear? Yes, no. Now I have covered Schedule 3. Schedule 3 activities which shall be treated as supply of goods. So supply of goods for consigned other person is a transfer. Now I am covered this to be treated as supply. It's transfer of goods, settling goods, transfer of riding activity, transfer of riding goods, but this will not be covered, which I have already explained. Why a SR restriction? The judgment is very simple, it would be able, but I have gone into the whole mechanism by which it is allowed. Not only understanding the action and result, but why. Then it will be very easy for you to understand the whole context. Supply of services. The following shall be treated as namely renting of available would be considered as a taxable construction of a complex, building or service structure or a part thereof, including a complex building intended for a sale to a buyer. So, if any builder is doing construction of a complex building, service structure, part of whereof, including the complex building intended for a sale to a buyer, wholly and partly, except where the entire construction is published and after the issue of compulsory certificate, wherever required, but after the first occupation, whichever is earlier, first occupation or BU permission, whichever is the thing. This will not be. Thus, SR construction 4.80 crore this thing was allowed. I'm not going to fix the case. This is a Tripura High Court judgment. This is SR construction versus Union of India. Okay. Are you clear? These are block credit. This judgment, this whole PPT I'm going to give you because it contains a lot of things which makes you this section very clear. Now I am into Chotulal versus Union of India. This is a wonderful case by which I want to consider. I've got 12 minutes left. Before that, I will consider Chotulal. In Chotulal, these are explained that in what are the cases where they can attach the bank account. Many times banks are attached. Bank attachment, there is a power and there are rules to be followed, and there is a period of 1 year, and there are certain sections under which you can block it, not other way whole. Once you go through this concept, there is no problem. First, I will explain you the section 73, 74 rules. The other one, which I have explained you the whole block credit concept. The third one is attachment of the property. This is the third concept I have covered through the judgment. Attachment of a bank account where the practitioner himself was partially responsible for allowing bank account to remain attached for a long time is not taken. This judgment, though he was not given a power to use, the High Court has rejected his application, but I have explained in detail so that you can use it. We should approach the authority under Rule 159 within 1 week. So once your account is seized within 1 week, you can file the form, and the authority has to decide by issuing the notice under this form. The issue is raised on the fact that those are not liable to exchange have been taken at appropriate level. This is at the time of appeal to the Mumbai High Court. They have referred JKM Enterprise Limited, and they have also used formative text FAB versus State of Gujarat. They have again quoted Bindas Plating Limited versus ADS 116textman.com 28. What I'm here I'm referring section 83, where after the provisional attachment to protect the revenue, as per chapter 12, 13, and chapter 12, 14, and 15, where after the intimation of any proceeding under chapter 12, 13, 14, The commissioner is of the opinion that for the purpose of protecting the interest of the government revenue, it is necessary to do so. He may ask an order in writing, provisionally attaching the property, including the bank account belonging to a taxable person or any person as specified in section 1A of section 122 in such manner as may be prescribed. Every such provisional attachment shall cease to have effect after the expiry of a period of 1 year from the date of order under section 1. Okay? So what they say, but before attaching the property of anyone, including the other person, they should fall under section 122 1A, and it is to be provisional. Now, what is section 122A? Where a taxable person has supply any goods or services or both. I have provided supply where a taxable person, when I am supplying the goods or services, both without issue of
Sorry
invoice.
for the interruptions, but
Issue is
many of the
incorrect for this.
participants are saying that
Or number two,
uh,
issue invoices or bill without supply of issue any invoice or bill without supply of goods. I am raising a bill. I am a taxable person. NMP is a taxable person who issues an invoice but does not provide services or does not supply goods. Section 122, 1, 2. In the first case, I am supplying the goods and services but not bill. Under subsection 2, I am supplying the invoices but not goods or services. 3. I take a utilize ITC without actual receipt of it. I am buying the bills, okay, making the payment. There is an entry in
Nitin sir,
GSTR
many of the
1, CA,
participants have
taxes paid appropriately, so 100, 200, whatever difference I paid. But I have not actually received goods. 3. And I take or distribute tax input taxes in contravention of section 20 and rules made thereunder. If these are the conditions in which 1, 2, 3, 4, and this thing, if anybody wants to, any officer, commissioner, any GST commissioner feels that this person has taken an advantage of this section, has siphoned up the money, and if I don't attach this property include immovable property, security, bank, car, whatever may be, demat account, these are the first condition that he should establish that a taxable person has taken this for credit in his using this misappropriation provision. And because if this money is not collected with interest, then they are liable to.
sir, many of the participants have raised a concern that they are not able to listen properly. So can you make it a little bit louder?
I am speaking as loud as possible.
Uh, okay, so maybe I think can you increase
Yes,
the volume of
but I
the
was
system?
able to listen to your voice also when I was speaking.
Okay, so because many
Okay,
of the
you
participants
can.
are writing,
You are not able to listen right now anything.
no, I am able to listen, but many of the participants are facing the
Okay.
constraints.
Now what has happened? There is only 6 minutes left. Okay.
Okay,
Let me finish it up and then because very less time is left. Okay.
okay, no
So let
problem.
it
You can
go like
continue.
this. Okay.
Okay.
Because I'm going to complete at 5. Okay. So let us finish right now. Okay. 1 second. Where's the commissioner? Okay. Let me go through it. No, let us not go into it now. There's already 5 minutes left, so I don't want to go into anything. Okay. 1 second. Chaturlal, this I've covered. A judgment referred in JKM, I've covered this. Okay. Now I'm covered this. What I said previously These are 1, 2, 5, and 8 of section 1. If these are the things not covered, then they can seize my bank account. They cannot seize my bank account or my any person who is benefited by this section. They are not entitled to seize the property. So what is the provisional attachment of the property? When the commissioner decides to attach the property, including the bank account, in accordance with the provision of section 83, he shall pass an order from GST or DST 3, section 22, to the effect that mentioning the details of the property attached. So what will do commissioner? Decide to attach the property, including the bank account, in accordance with the provision of section 83. Uh, he shall pass an order under section DST 3 to the effect mentioning that the details of the property which is attached. Okay. The commissioner shall a copy of order DST where the commissioner decides to attach any property, including the bank account, in accordance with the provision shall pass an order. Commissioner will pass an order under section DST to the effect. First, he will pass an order under DST 22. He will give you an order to bank or say security or to the registrar, and he will submit one of the copy to the concerned person whose bank account seized. The commissioner shall a copy of order attachment to the concerned revenue officer transfer to such authority to employ the said property which shall be removed only on the written instruction of the commissioner to the effect, and a copy thereof such order shall also be sent to the person whose property being attached under section 83, where the property attached is perishable. I'm not going into explanation of perishable property. Okay, but more or less provision are there. Any person whose property is attached may file an objection in DRC 22A to the effect that the property attached is not liable to attach. The commissioner may afford, after affording an opportunity being heard to the person filing the objection, release the said property in DRC 23. The commissioner may, upon being satisfied with the property, or not liable to attach, release the property by issuing DRC 23. What he said, he will issue DSA 23, say commission upon being released. Thus, I think Chotulal I have covered. Now, last judgment is Rohit Enterprise. I will cover in just 3-4 minutes. Rohit Enterprise versus Commissioner of State of GST. The petitioner is a proprietary firm. What has happened in this case? I'm going before going into this thing. Hello? Huh? Yeah? Yeah, I'm here. I'm here with you. The petitioner is a property firm engaged in the business of fabrication work. What has happened in this case? Let me finish in 5 minutes. In this case, the person Rohit Enterprise has taken a GST number. He could not file the GST return in time, and his suo moto return was cancelled. Number was cancelled. He applied for revocation of the same. The revocation was not granted. He applied to the appellate office. That was also not granted. Then he applied to the Bombay High Court. Bombay High Court also, he was late in filing return appeal, and the appellate also and the respondent, the government department says he is not entitled to revocation of his GST number. Court says like this: the writ petition is allowed. The order dated 28th February 2022 suspending GST registration number. The order stated 14th February 2020 cancelling GST number. And the passed by the state officer. Order 21/10/2022 passed by the DCIT, Aurangabad. Our quest and exercise. We hold and declare that registration in the name of petitioner is valid and onward subject to the condition the petitioner files up to GST and deposes the entire proceeding due along with applicable interest of the section 27. The rule made is absolute term. The reason given. Since it is merely a matter of cancellation of registration number, the question of limitation should not bother us. Since it cannot be said that any right has accrued to the state which would rather adversely affect the cancellation. Applying the aforesaid guidelines to affect the present case, we find that The petitioner, who is a sufferer of unique circumstances resulting in the pandemic and his health barrier, would be put to great hardship for want of GST registration. The petitioner, who is a small-scale enterprise, cannot carry on production activity in the absence of GST registration. Resultant right of livelihood would be affected. Since a statutory appeal suffered the dismissal of that account, we cannot allow the situation to continue. We further find that the facts of the circumstance of the case would be appropriate to exercise jurisdiction, the section under Article 226 of the Constitution. Even looking at the object of the provision of GST, it is not in the interest of the government to curtail the right of entrepreneur to do business. The petitioner must be allowed to continue business and continue to contribute to the state revenue. Are you clear? This is the case in which they say that in the case of cancellation, no time limit would apply. Anytime, anywhere, you can file it. That's all. Everything is should be go like that. Clear? With this, I hand over the mic to the.
Thank you so much, sir.
Okay.
Am I audible to you? I think we can take.
I'm getting your voice.
Okay, sir, we can quickly take 2-3 questions.
Okay. I can take a question, no issue.
Yeah. So there is one question from member. Is a pre-SCN so-called notice before issuing DRC 01A mandatory?
Yeah, mandatory.
Okay. So Sudipika Khurana, it is mandatory.
And this presentation I'll share with you.
Okay, the presentation will be shared. So
and in that case, there is 3 slides which I have already covered with you. Do you know that? In that slide, everything was clearly mentioned. Let me go to that slide if possible. I'm going to 8 seconds. I'm going to the slide. If possible, I'll go to the slide. That slide will cover everything. DRC 1. Let me recap. First, there is a statement stage. Second, it is an SCN stage. Third, it is an order stage. So there would be a statement to SCN. Even if they have issued SCN, you have all right to make the presentation. What is the question again? Again, can you repeat it?
Is a pre-SOCOS notice before issuing DRC 01A mandatory?
Hello.
Hello. Am I audible to you?
This is the presentation.
Okay, sir.
Yes, part A, DRC 1A, DRC 3, DRC 4, part B, DRC 5, 6. Hello, I'm not getting the voice anything.
Okay. Am I audible now?
Hello.
Hello.
Swati, are you my voice?
Yeah, I'm able to listen you, sir. I think there is some voice constraint. Now can you able to hear me, sir?
मैडम इट माइट बी एट द एंड ऑफ सर आपकी आवाज सबको सुनाई दे रही है सर को ही दिक्कत हो सकती है सर के एंड
I think there is pressure. So no.
Hello.
So no problem. Just out of running of the time, we are concluding this sessions on the recent judgments on the GST. Sir, I would like to give you heartfelt my vote of thanks to you. You have very nicely covered the recent judgments by various authorities about the Karnataka and various high courts and Supreme Court judgments on the GST latest parts. So thank you so much, sir, for sharing your valuable knowledge and insightful discussions on the GST. Once again, I would like to say thank you. Thank you so much, sir. So now let's head towards the second seminar, webinar for the, and for that I would like to invite CA Vaibhav Goel, sir. So I would like to give the brief introductions. He has completed his diploma in insurance and risk management from ICI with All India rank 2. He has drafted opinions for various corporate clients on direct taxation matter. He has also delivered multiple sessions in various training programs, certificate courses, and also the seminar on income tax. With this brief introduction, sir, I would like to invite you, Vaibhav Goyal, sir.
थैंक यू मैडम, थैंक यू सर. पाठक सर, मैम हिंदी में बोल सकते हैं ना?
Preference would be English only because the members would be across the region, so that's why it's.
I will try to be in multilingual, sir. No problem. पाठक सर, आपका बहुत बहुत धन्यवाद. आपने बिल्कुल सिस्टमैटिकली सर चीजों को समझाने का प्रयास किया. यू मेड थिंग्स सिंपल फॉर अस. So because I am not so good in GST, so I just had a good touch of learning under you. So nice deliberation, sir, and nice learning for me too. So abhi hum we will continue with our some recent case laws of income tax. Sir, madam, this would be a monologue as sir said, or can we have some discussion between we three of us?
Yeah, definitely.
No. Yes, because until unless we discuss something, no, I get bored. So
I will also check in between the questions from the members, and I.
Yes, we will have mix and match, because one side monologue would be a boring activity for us as well as for the listeners. So it would be a dialogue kind of a situation here. So madam, if I refer you as sir, please don't mind, madam. So it would be just like that. So सबसे पहले हम यहाँ देखते हैं कि हम आज we will be discussing something very recent, which is very much common. That is section 153C of the Income Tax Act. Because various litigations have recently come across this section 153C of the Income Tax Act. Am I audible, sir, properly?
Yes, you are audible.
So I would just be sharing this screen for section 153C. So we will be looking at the section first, and then we will be coming up across certain questions. I would be putting across those questions, and madam and sir would try to answer those questions. And then I just like a humble student would try to evaluate myself how far I have been correct on those parameters. So yes, now my screen of section 153C is visible. Yeah, yes. So what does this it says? Notwithstanding anything contained in section 139, 147, 148, blah blah blah, where the assessing officer is satisfied, then clause A, clause B. What we will be reading here is the limitation period, because what is important now, because what has already been settled in clause A, clause B by Finance Act 2015, we would be touching it a little later. Now what we are here touching upon the jurisdiction of the assessing officer to make reassessment. We generally know that assessing officer can take up a case for only 6 years. Whether he can go beyond 6 years or not. Yes, madam. Whether assessing officer, do you practice in income tax, madam?
Till the ITR and scrutiny, not the ITAT and appeal matter.
Oh, okay. So आपको जो भी सही लगता हो आप वो जवाब दीजिए. I will not, we will not here to judge. आपको जो भी लगता हो, जो भी आपका common sense आपको अपना CA पढ़ाई का days में याद हो, इस तरह से आप बोलिएगा, तो it would be very helpful in bringing up the concept very clearly to the audience around here. So what does we generally believe that assessing officer can go up to 6 years, and we have a faint idea that he can go beyond 6 years into certain circumstances. Now here what is happening here, what is section 153 saying? 153 says that the assessing officer can issue notice under section 153C irrespective of the time limit provided under section 149. 149 says we are talking about a stage where Finance Act 2021 was not there. We would be reading it from the myopic view that Finance Act 2021 is not there. Then we will be able to understand the controversy and the judicial pronouncements which we are facing today. Recently, the Delhi High Court judgment of Indian National Congress is also a highlight to this. So I am just preparing the ground for discussion of that Indian National Congress decision actually. So See, 153 says, 149 says you can go up to 6 years from the end of the relevant assessment year. So let's take it. It is 31st of March 2023. Today is 31st of March 2023. So how much back I can go? 23 minus 6. I can go up to assessment year 16-17. So assessment year 16-17 plus 6 comes out to be 31st of March 2023. So I can only touch upon assessment years 16-17. I cannot go beyond assessment year 16-17. What does this section 153 says? 153C says that if there is a search in somebody's case, suppose there is a search at an builder's place, and at that builder's place certain documents have been found. वहां पे मैडम स्वाति मैडम ने एक बिल्डर के यहाँ पे फ्लैट बुक कर रखा था. वो फ्लैट बुक करने के लिए मैडम ने 1 करोड़ रुपीस कैश में दिया था. मैडम हैज गिवन 1 करोड़ रुपीस इन कैश टू अ बिल्डर एंड द बिल्डर इज ओमैक्स लिमिटेड, and there is a research and there is a raid at the omax builder, and there the accountant therein has recorded something in excel. Since there is a time of digital, I would consider it as a excel sheet, not a manual handwritten entry, because excel entry we would be corroborating, if time would permit, we would be corroborating how Madras High Court has ruled that how this excel entry can be used as a evidence, and under what circumstances this excel entry cannot be used as an evidence. So this excel entry has been made by the accountant of Omax Limited. What this Omax Limited has done, that Swati madam has given 1 crore rupees against this unit number 16 at Connaught Place. So and he has very intelligently kept the date. Instead of 2018, he has kept the date as 2008. So whenever any search happens, he would be saying that this money would relate to 2008, which is far beyond 10 years. Search is happening on 31st of March 2021, and this 10 years would fall beyond that. So he has intelligently kept the date of that excel entry as 30th May 2008. Whether an entry of 2008 can be scrutinized in 2021, the answer is no, because 10 years have already elapsed. So during statements, some his statements have recorded, and he acceded to that this entry was purposefully, instead of 2018, was written as 2008. So now he has what evidence does department has against Madam Swati? They have evidence that there is an excel entry wherein Madam has given 1 crores. Secondly, there is a statement of the accountant or the chief executive officer of Omax Limited which says Madam has given cash. Or he would have given a generalized statement that we have the tendency of accepting cash and we maintain this record in an Excel sheet, and we manipulate this data by either dividing the figure by 100 or dividing the figure by 1000, manipulating the dates, and the statement has been recorded there. Now this data, this incriminating material or the so-called incriminating material in the form of a statement is available with the income tax department. The search happens on 31st of March 2021. So how many years can the assessing officer travel back? The assessing officer under this 153C can travel up to 6 preceding financial years from the date of the search. Meaning thereby he can travel up to 6 preceding years. Fine. Whether he can travel beyond those 6 years, suppose there happens to be a case of an entry operation, and some entry is actually a flat, or some madam has booked a flat way back in 2000 and actually in 2008, or actually in 2016, 15 or 14, beyond this 6-year period. So whether the assessing officer can go and touch upon the scrutiny assessment of madam. Search has not taken place on madam. Search has taken place on Omax Group. This section 153C allows assessing officer to scrutinize accounts of the madam just like it was a case of a searched person. Only requirement is that he has to record a satisfaction. AO of the search person has to record a satisfaction that the document seized contain information which relates to non-searched person, and the assessing officer having jurisdiction over madam has to record a satisfaction. Yes, the information or the document supplied to me by the AO of the search person has an effect on the total income of madam, because madam has given unaccounted cash of 1 crore rupees. Madam would have to explain how madam has earned those 1 crore rupees. So this would have to be determined under section 153C. This is the whole story about 153C. Now, whether search took place in 2021 and this satisfaction record, now actually we take the case search took place on 18th of November 2019, and the satisfaction has been recorded on 18th of June 2022. So search took place in assessment year 2021. So this madam, 6 preceding years for assessment year 2021 would be 1920, 1817, 1718, 16 17, 15 16, 14 15, and 13 14. Yes madam, sorry, it would be 14 15 to assessment years 1920, 14 15, 15 16, 16 17, 17 18, 18 19, 19 20. So these 6 years would be preceding 18th of November 2019. This would be 6th assessment year preceding the date of the search, from 1415 to assessment year 1920. Now the satisfaction has been recorded in after 3 years on 18th of June 2022. So whether the 6 preceding years should take place from 18th of June 2022 or they should continue from 18th of November 2019. Why this issue has cropped up? Because if we take assessment year 20 to 23 as the first year, we would be requiring to satisfy fourth proviso to section 153 capital A if we have to go beyond assessment year 17-18, because 6 year would have come to an end therein. So for assessment year, so we would be requiring how 10 years would have to be calculated, how 6 years have to be calculated. Recently, Delhi High Court have said, Honorable Supreme Court has said that this proviso, what does this proviso say? Provided that in case of a such other person, the reference to the date of initiation of search under section 132 in the case of in the second proviso to subsection 1 of section 153 capital A shall be construed as reference to the date of receiving of the books or documents seized or requisitioned by the assessing officer having jurisdiction over the other person. Meaning thereby the 10-year or a 6-year period has to be calculated for the purpose of this proviso from the date when the satisfaction has been recorded, that is 18th of June 2022. So the 6-year period has to be calculated from this. Department always contends, what does department contends? That the proviso has a limited application. How come? The proviso, they say that this proviso should be limited only for the purpose of abatement. Abatement meaning thereby there was certain 143 proceeding going on, there were 147 proceeding going on, and then certainly there is a satisfaction. So whether there can be 2 proceedings for a single assessment year, prior to Finance Act 2021 it was not allowed. So the proceedings continuing should have to be abate, and 153C would have the jurisdiction to make additions, make assessment with respect to abated years. So Honorable Supreme Court recently held that since the search took place in 2019 and you are recording satisfaction after 4 years, 3 years, and you are asking the assessee to maintain the books of accounts of 10 years, whether there is any law in the law currently which says that assessee has to require and maintain books of accounts for 10 years? No, Your Honor. The only requirement is until and 148 was there, 6 years time period was there. For 6-year time period, you had a you could have maintained. Now for 13, 14, which is far beyond my jurisdiction. So how can you say that assessee would be required? So Supreme Court said that this provision is disproportionate, and they read down this provision. How did they read down? They said that you have to calculate 6 years or 10 years time frame with respect to the date on which you record the satisfaction. The date of search qua the non-search person would be the date of recording of satisfaction by the assessing officer. This has recently been held by the Honorable Supreme Court. Now, this controversy has gained significance because before Delhi High Court and various other high courts, various petitions have been filed challenging action under Section 153C on the same issue. Why? Because department says the interpretation of the Honorable Supreme Court is only with respect to where search has been initiated and conducted prior to Finance Act 2017. And after Finance Act 2017, this provision will not be, this interpretation of the Supreme Court will not be applicable. However, the Honorable Delhi High Court has admitted petition saying that this matter requires consideration and has given partial stays in various matters. So we are of the confident view that this date of satisfaction should be the date of search. Now the second question comes. Now the fourth proviso, let's read what is the fourth proviso to Section 153 capital A. Because now we have understood 6 years. 6 years there is no requirement. Any entry, any amount comes up during search, and this should be an incriminating material. What is the meaning of incriminating material? That this should affect the total income of the assessee. If something is already recorded in the books of accounts which does not affect the total income of the assessee, so this cannot be treated as incriminating material. For that matter, if during search some balance sheets are found, so whether balance sheet can be categorized as incriminating material? No. If certain bills and vouchers are found during search, and these bills and vouchers are duly recorded in the books of accounts, whether these can be categorized as incriminating material? No. So incriminating material has to be something which has an effect on the total income of the assessee, against which the department intends to use those materials. Now, when we wish to invoke a period beyond 6 years, because it has a two-pronged controversy, whether we can go from 6 to 10 or whether it is 6 to 9, the controversy number one. The controversy number two, how we have to determine this quantum of 50 lakh rupees, because this would be important when we would be just touching upon Section 149, which is the recent provisions with respect to searches after 1st of April 2021. Now let's come to fourth proviso. What does the fourth proviso says? Fourth proviso. Yes, that no notice for assessment or reassessment shall be issued by the assessing officer for relevant assessment year or years. This is relevant assessment year or years, meaning for years beyond 6 years से बाद वाले पीछे वाले जो हम बात कर रहे हैं 7, 8 or 9 or 10, as the case may be. Department says it is 10 and assessees and EV council contend it is 9. So we will just try to understand how we contend it is 9. So what it says, no notice shall be issued for the relevant assessment year or years unless the assessing officer has in his possession, mark the words madam, possession, books of accounts or other documents or evidence which reveal that there must be certain books of accounts or documents or evidence which is in itself revealing that income represented in the form of an asset which has escaped assessment amounts to or is likely to amounts to 50 lakh rupees or more in the relevant year or aggregate in the relevant years, and the search has initiated after 1st of April 2017. In our case, search has taken place after 1st of April 2017 because we have taken the example of 18th of November 2017. So the assessing officer would be within its rights to open our 10 years cases or the relevant year cases. We would be understanding what relevant year or relevant assessment year means in explanation 1. So what is required? There must be possession of books of accounts. Why this is important? because if the possession is not there, this would give unbridled power to the assessing officer to open our cases beyond 6 years. Under Article 14, there has to be an equality of law. Articles 19 and 21, this triangular of 14, 19, and 21 of the Constitution limits the jurisdiction of the statutory authorities and also protects and upholds the integrity and the independence of the people of India. So this existence of possession of books of accounts, this existence of evidence is essential for the assessing officer to go beyond 6 years. No law requires us to maintain beyond 6 years. And if during search the assessing officer or the search party has come across certain documents, this document itself is revealing that there has been an income which has escaped assessment, and this escaped income is represented in the form of an asset. This would be satisfactory ground to show that the assessee would be in a fair position to defend his case. Assessing officer may give me notice for, suppose, madam, 10-11, and I don't have documents, I have burned them. Would I be in a position to defend my case? No. So would that mean that assessing officer can make any and sundry additions as he may like? No. So what does the legislature has made a balance? What they have made a balance that since beyond 6 years you are not required to maintain any books of accounts. Now if you happen to maintain any books of accounts and during search we come across those books of accounts which is revealing that you have escaped, the word important is here, which is revealing that the income has escaped assessment, then the assessing officer would be in the rights, well within its rights to question you, because you are in the position to explain that this is not the income, or this income has already been offered to tax, or this asset has been made out of past saving, or this asset has been made out of borrowings or xyz. Now this represented in the form of an asset is important. Recently certain searches has taken place, and during those searches certain tele data has been found, and in those tele data it has been alleged by the department that it is in the form of an accommodation entry, 50 lakh rupees, 60 lakh rupees, 1 crores, etc. So in the satisfaction note prepared by the assessing officer, he has written that it is a case of accommodation entry. Assessee has received 1 crore rupees via so and so NBFC, and which is only a paper company managed by so and so. So whether, madam, this satisfaction where he has found certain books of accounts, certain ledgers, whether he has found certain ledgers wherein certain accommodation entry has been found. Accommodation entry means there is a credit entry in my books of accounts. So whether this credit entry in my books of accounts would give jurisdiction to assessing officer to open beyond 6 years, even if it is more than 50 lakhs. It is in the form of a cash credit. It is in the form of a loan. And what is the usage of the language here? Represented in the form of an asset. So whether this represents an asset, department says yes, it represents the asset. Why? Because you have taken the loan and that loan would have been deposited in some bank account, and that bank account represents asset. But whether this satisfaction comes into the satisfaction note that they are assessing the deposit in my bank account, or whether they are assessing the credit entry in my books of accounts, when they prepare satisfaction note, you would come across that they try to assess the accommodation entry in my books of accounts. That is entry in my books of accounts, not the asset. So this satisfaction note which they have prepared cannot be amended afterwards after preparation. No words can be added to it, no words can be deleted from it, and whatever has been written, the courts would decipher the meaning, courts would decipher the application of mind only from the satisfaction record. जो मैडम उस कागज में लिखा है उसी से समझना का प्रयास करेगा कोर्ट कि भाई आपने उस समय आप एंट्री को एसेस करना चाह रहे थे या उस एसेट को एसेस करना चाह रहे थे. Therefore, we would come to know when we come to section 149, there has been an amendment by Finance Act 2022, wherein they say that if you want to go beyond 3 years, not only we can go for asset, there is an escapement represented in the form of an asset, we can go when there is an entry in the books of accounts. When there is an entry in the books of accounts, assessing officer can go beyond 3 years. So here Is it written books of accounts? No. So for the purpose of section 153C, that is for the search concluded or conducted before 31st of March 2021, the only remedy available with the department is only if it is represented in the form of an asset. Now, how this 9 year or 10 years have to be calculated? Madam, you have to just help me out with the mathematics. No, no, we will be reading explanation 1. Now, this explanation 1 says relevant assessment year shall mean an assessment year preceding the assessment year relevant to the previous year in which search is conducted. Now, we will take the year in which search is conducted as 18th of November 2019. So what it says, assessment year preceding the assessment year relevant to the previous year in which search is conducted, which falls beyond, meaning it is talking about which falls beyond 6 assessment years, but not later than, which falls beyond 6 assessment years, that is which is falling beyond assessment year 14-15, because we have capped our 6 preceding years. It is from 14-15 to 19-20. So now it is talking about which falls beyond 6 assessment year, but not later than 10 assessment years from the end of the assessment year relevant to the previous year in which search is conducted or requisition is made. So whether this would be whether we would be calculating this from 31st of March 2019, or whether we would be calculating these 10 years from 31st of March 2020. This phrase, not 10 assessment years from the end of the assessment year relevant to the previous year in which search is concluded. So we would be counting 10 assessment years. Whether our first assessment year to count those backward 10 years would be assessment year 1920 or 2021. Yes, madam. It would be assessment year 2021. We would be counting it from that year. Assessment year 2021 would be counted as one first assessment year for these 10 assessment years. So what it says then, whether we will be able to go beyond assessment year 11-12? No. Assessment year 11-12 will be the first one. 11-12, 12-13, 13-14, 14-15, 15-16, 17-18, 18-19, 19-20, 20-21. Madam, it comes to 9. We counted 9. Here it is saying 10. Yes, madam. This is what department is doing. Why? What is they are doing? They are counting from the year in which they want to assess. उसको फर्स्ट ईयर मान रहे हैं. जिस ईयर को एसेस करना मांग रहे हैं उस ईयर को फर्स्ट ईयर मान रहे हैं, और वहां से 1 2 3 4 5 6 7 8 9 10 कर रहे हैं. और कहां तक कर रहे हैं? असेसमेंट ईयर 19-20 तक कर रहे हैं. वो कह रहे हैं हमें असेसमेंट ईयर 10-11 का खोलना है. असेसमेंट ईयर 10-11 प्लस 10 years would come up to assessment year 19-20. So we are going up to that. हमें 20-21 तक नहीं जाना, हम वहीं तक मानेंगे. But the department's view has been rejected by Honorable Madras High Court, which says for counting this 10 years, for those 6 years you may take first year as assessment year 19-20, no problem. But for counting these 10 years, you have to take the year of assessment year of search as the first year. So it would come out to be assessment year 11-12. So even if the escapement is more than 50 lakh rupees, those years would be beyond jurisdiction. So what happens? We comes across 9 assessment years. It is 6 or 9, not 6 or 10 actually. Okay, madam. So if anybody has query till now, you can take up till this issue.
I think there is only one above 50 lakhs, they can go up to 10 years. One member, Ashok Jain, has just written it.
Up to 10 years. But what we have understood, madam, that 10 year has to be read as 9 years, not 10 years. Department would be reading is at 10 years. And this 10 years they have brought in 149. When we will be reading 149 just in a couple of minutes, we would be coming to know that now they have come across a different strategy. Now they have said, no, we will not be reading it from the search year backwards. We would be reading it from the relevant assessment year forward. So they would be coming across 11 years. So now if they would have a jurisdiction to assess us for 11 years instead of 10 years actually. Now this subsection 3 is important. Nothing contained in this section shall apply in relation to search conducted after 1st of April 2021. See, though what I am proposing here is not a tested item, but it is just a proposition. Though search for a non-searched person was the date when satisfaction has been recorded. That recording is after 1st of April 2021. Whether that would give jurisdiction to the assessing officer to issue under 153C or under section 148. He says, the department says, search has happened before, we would be going by 153C, we would not be going by 148 because search has not taken place after 1st of April 2021. So maybe they might be doing it. Now certain, wait a minute, madam, I have to see, I have prepared something on this. Now let's come to section 148 because now we would be linking it to now 153C major controversies with respect to limitations. So we have done about interlinked topic with 153C because now we would be touching only of the searched person. 148 not normally, but 148 for the non-searched person in a search case. Which generally now madam, this is 148. We all know 148 means reopening these concluded cases. In Kabul Chabla, in all those Abhisar Buildwell, we were said that if it is a completed year or unabated year, you can make addition only on the basis of incriminating material. Abhisar Buildwell said if there is incriminating material, you can make addition on the basis of incriminating material. But for those year where you are making addition, you have the jurisdiction to assess the total income. Meaning thereby you can also make inquiry with respect to incomes disclosed in the return of income or any other material which comes to your knowledge. So the case of suppose assessment year 18-19 was going on and incriminating material was there, and in another wing there has been another material. The search was going, material originally was with respect to Aditya Jain Group. Then you come, assessing officer come across that there is some Himanshu Verma. He comes across those entries. So he would be in the jurisdiction to make addition because though this material has not been collected during search, but this other material can be used because there is already an incriminating material for that year for which the assessing officer has jurisdiction. Now does this mean he can make addition, he can make fishing and roving inquiry as and when he makes to like? Does statutory authorities can be given such an unbridled power to make so much roving inquiries that they can get into the private lives of individuals? Kya, madam?
Definitely not.
Definitely not. So the what we should interpret Abhisar Buildware in a sense that if anything, while assessment itself comes to notice, देखते ही देखते सामने नजर आ जाता है कि हाँ देयर वाज एन इशू ऑफ 5627B, वहां देखते ही देखते 68 का इशू भी नजर आ जाता है, या 68 का देखते देखते 562B का इशू नजर आ जाता है, या परचेज का हम देखते देखते बोगस ट्रेड पेबल्स नजर आ जाते हैं, या अनसिक्योर्ड लोन का देखते देखते और अनसिक्योर्ड लोन बोगस दिख जाते हैं. तो उन इश्यूज, दोज इश्यूज कैन बी कवर्ड, but not anything which is not on. He cannot go on and make fishing and trolling inquiries just like on a boat towards Park State to just have deep trawlers there and to catch fishes and all those. He cannot go on making inquiries like that under 153C or 153 capital A. Now what happens when Abhisar Bildwell said that you can make addition only with respect to incriminating material in respect of completed years, and for other materials you have the jurisdictions to go for section 148. Now the CBDT comes up with an interesting judgment instruction. Just like every year, instruction number 1 of 2022 is controversial. Similarly, instruction number 1 of 2023 is also controversial. What does this instruction number 1 oblique 2023 does? It says that Supreme Court has given a finding or has given a direction that in respect of completed AYs where no incriminating material has been found, other additions made on other material can be used for the purpose of reopening under section 148 read with section 150. What does section 150 says? Just madam, we will look at what does 150 says. See, we would be concerned with assessment year 9, 10, 10, 11, where additions would have been made on the basis of other material, not incriminating material, sir. When there has been addition based on other material instead of incriminating material, and now Supreme Court in the Abhisar Bildwell says that if you have any information with yourself and it satisfies the requirement of explanation 1 to section 148, you are well within your rights to initiate proceeding under section 147 and 148. What does this section 150 says? Section 150 says, notwithstanding anything contained in section 149, meaning thereby they are lifting the embargo of limitation under section 159, meaning thereby 6 years, 10 years, 3 years or 16 years, whatever time it may have been given therein, that embargo has been lifted. And it says notice under section 148 may be issued at any time for the purpose of making assessment, reassessment or recomputation. Madam, the points to be noted now. In consequence of or to give effect to any finding or direction contained in an order passed by an authority in any proceeding under this act by way of appeal, reference, revision, or by a court in any proceeding under any other law. Whether the directions or the observations of Honorable Supreme Court in Abhisar Bildwell act as findings or directions, the answer is no, because Revenue himself has moved an miscellaneous application before Honorable Supreme Court seeking whether the observations are in the nature of findings or whether they are in the nature of directions. The Honorable Supreme Court has said that they are not inclined to admit this miscellaneous application. If they want to get any suitable order from the court, Revenue is free to move a review petition, which they have not moved. So in the miscellaneous application, this miscellaneous application has been rejected, that there has been no direction or finding. So the CBDT instruction using 150 to invoke those years for which limitation has already expired under section 149 is erroneous. So those assessments would be coming up in the month of April now, because Central Circle is currently busy with certain other activities. Now those assessments which they have taken up for 148 would be getting time barred in April this coming month. So because they have to be completed by 30th of April 2024. This is the limitation created by the instruction itself. So now whether they can be initiated, firstly they cannot be, because it is not a finding or a direction given by the Honorable Supreme Court. Secondly, there has been an embargo under subsection 2. Whether for assessment year 8, 9, 10, 11 or those years when Abhisar Bildwell judgment was being rendered by the Honorable Supreme Court, whether assessment or can be reopened for that assessment year. See, what does subsection 2 says? When that order which is a subject matter of appeal, what was before Honorable Supreme Court? The judgment of Honorable High Courts. When the judgments of Honorable High Courts were before Honorable Supreme Court, when the Honorable High Court made that judgment, maybe in 2017, 2018 or any other year, whether on that date 148 could have been issued for that assessment year, this has to be checked. If 148 could not be issued when that order of the Honorable High Court was made, this section 150 subsection 2 act as an embargo. Though the okay. So 150 subsection 2 comes to the rescue of the assessee again. So, madam, I have been asked by my staff here to be a little lower. So I would just voice को थोड़ा सा मंदा करेगा, थोड़ा सा ज्यादा हो गया था. तो अब हम आते हैं मैडम, आप पे कुछ सवाल उठ रहे हैं इसमें?
Yes, sir. There is one.
Do you have any questions, madam?
Please also cover case of INC in presentation. One of the participants has.
करते हैं मैडम, करते हैं. तो टाइम है, INC को ही ले लेते हैं, है ना? एक मिनट. I will stop sharing and I would just share again INC judgment. Yes. Yes. Madam, now screen is visible. INC judgment.
Yeah, it's visible perfectly.
Indian National Congress. Yes. See, INC, there were good advocates. Dr. Abhishek Manu Singhvi was leading it. And they have tried to compile all the legal issues which are applicable for 153C at the moment. See, we will take issue by issue. So what they say, that 6th assessment year, as we were saying, for assessment year 14-15 to assessment year 2021 would be covered as per the department 6-year policy. What they are assessing at the Indian National Congress was saying that since the satisfaction has been recorded in the year assessment year 2022, so assessment year 14-15, 15-16 and 16-17 would be barred by period of limitation by virtue of this first proviso to section 153C. Why? Because the date of search would be, qua the non-search person would be the date of recording of satisfaction. And the date of when was satisfaction note recorded? In 2022, and 6 years would be beyond this. So the Dr. Singhvi was contending that since the proceeding has been initiated under section 153C and the satisfaction note does not have any reference to the fourth proviso to section 153 capital A, wherein 10-year jurisdiction was given to the assessing officer, he was not within its right to initiate reassessment proceeding for 14-15, 15-16 and 16-17, despite the fact the quantum escaping assessment in the satisfaction note was more than 50 lakh rupees. So what did the court said? Court said that the satisfaction note prepared by the assessing officer is 153C read with section 153 capital A. So when the satisfaction note was itself saying that the jurisdiction under section 153C has been invoked in conjunction with the provision contained under section 153 capital A, the fourth proviso to subsection 1 of section 153A is already embedded therein. So the assessing officer need not record a separate and a separate satisfaction. So what the next Abhishek Singhvi, Dr. Singhvi was contending that in Singat Educational Society, the Honorable Supreme Court has said that there may be 6 years or 10 years. The assessing officer should record every year separate satisfaction note. So what does Honorable Delhi High Court said? That there is no requirement to have a separate satisfaction note. What is essential that when he is recording a satisfaction note, the satisfaction note must, the common satisfaction note must touch upon all the years in the block assessment year. So when it is touching upon all assessment years, they referring to incriminating material in the block assessment year, that is fine. So there is no requirement of having a separate assessment, a separate satisfaction note. And Honorable Delhi High Court did not touch upon that asset part which we were talking about now in respect of an represented in the form of an asset. So the Delhi High Court did not touch upon much upon that. Why? Because they were prima facie satisfied that there was incriminating material exceeding rupees 50 lakhs. So they were not very much interested in dwelling whether it is in the form of an asset or whether it is in the form of an accommodation entry. They were prima facie satisfied that jurisdiction of this court or jurisdiction of Delhi High Court was not there, because they have come up at a very fag end. Because madam, March coming, assessments would have to be closed by 31st of March, and they approached the Honorable Delhi High Court at the fag end just to stop the proceeding. They could have initiated a writ petition in 2022 when 153C were issued to them in 2022. So they waited till 2024. So what was at the back of the mind there, that is why they left an issue which is a very important issue left open, which we will be seeing in just a couple of minutes. This Calcutta Nightwear says that when in the case of a surged person, you come across there is a ledger in the case of a third person and you record a satisfaction. When has to be that satisfaction recorded? Immediately at the time of the surge or immediately after the assessment in the case of a surged person? Kolkata Nightwear says it has to be recorded immediately after the assessment has been completed in the case of a surged person. So what is the meaning of immediately thereafter? Suppose there has been information with respect to 2000 assessees. The AO of the assessing of the surged person, can he record 2000 satisfaction note immediately in one day? No, madam, because it would require time. 2000 satisfactions in one day, it would be very difficult. So the court said, it has to be depend upon facts of the case. What is the meaning of immediately after? What is the volume of the material, what is the circumstances, in how many cases the notice has to be issued. This immediately after has to be interpreted based on facts of the case, and those facts of the case would determine what is the meaning of immediately after. The court referred to CBDT circular, so all of us may refer to circular number 24 of 2015 to contend search has taken place in 2019, assessment has been completed in 2021, and you are taking recording satisfaction in 2022. So this time gap between search and recording of satisfaction, which is more than 24 months, 30 months, 35 months as the case may be, or 40 months in some cases. So this recording of satisfaction is not valid in law. But this has to be judged in the light of other circumstances, as Honorable Delhi High Court has said. Now comes the other issue. In this, we would be touching upon this relevant assessment year. So they touched upon relevant assessment year read with section 154. So because what the assessing officer was saying, they have till 14-15. So Honorable Delhi High Court said you have material, so you can go up to 14-15 based on that 10-year consent. But this gives us a fair hint. This gives us a fair hint that 6 years would be counted from the date when satisfaction has been recorded. So this, though judgments have not come from Delhi High Court conclusively, but this paragraph of the Indian National Congress, in the case of Indian National Congress, gives us a fair hint that 6 years would be counted from there, because they have quoted Jasjeet Singh itself. We see what we were saying, read with section. So if it is read with section 153A, he did not quote specific 4-page fourth proviso to that. Now they were talking about Kabul Chawla and all those. So basically we have covered every part of that common satisfaction note. We have covered 153C, we have covered fourth proviso, we have covered, and so this Indian National Congress, we have covered everything. It's all being completed from the so because why they did not allude to the prayers of Indian National Congress, that they approached it very late. That satisfaction note was provided to them on 28th of June 2023, and they waited till March 2024 to approach the Honorable Delhi High Court. So that the interim period which they were not able to explain, so which went against them. Particularly, they could have won on the aspect that the satisfaction was not recorded immediately after, so they could have gone into that. So I have just covered Indian National Congress decision, madam, in 5 minutes, no? Yes, 5 minutes. If any question in 5 minutes, so I would be happy to take up.
Members, if you have any questions, you can just write it down. Presently, there are no questions from any members.
Madam, you have any questions?
No.
No, madam. Then, madam, I will take your quiz, madam. Then you know much more than what I know. So then I will ask questions from you, madam. Because either you have to ask or either I have to ask. Because as sir said in the morning, at the beginning of the session, na, I heard it a little bit that we have to learn, and questioning helps us to learn.
There is one question from GST, but I don't know Nitin sir is there or not, and I think my voice is not audible to him.
Nitin sir.
Else, there are some questions from the GST part. Members, if you have any questions for taxation, any questions around the recent judgments, or you can just ask here.
But because they would not be asking, because I may not have been so good in explaining, no? So they would either not have understood it or they are much more intelligent like you, madam. uh, so madam, now just sir, a recent controversy to which I am a part, I have just in one of the petitions I have moved before Honorable Delhi High Court with respect to explanation to clause 4 to section 148. This is on your screens, madam. What does it says? Where the assessing officer is satisfied, meaning we have to draw the same reasoning as we used to draw for reasons to believe in 148 prior to Finance Act 2021. With the prior approval of Principal Commissioner, that any books of accounts seized or requisitioned under section 132 or 132A in case of any other person on or after 1st day of April 2021 pertains to or pertain to or any information contained therein relate to the assessor. The assessing officer shall be deemed, another word, deemed, meaning thereby if there any document has been found from during search and my name is found there, madam's name is found there, whether this document has any bearing, without having this document having any bearing on the total income of madam, this document would be deemed as if income chargeable to tax assessable in the hands of madam has escaped assessment. How far this is fine? A ledger has been found at Omicro where all the payments have been made through banking channel, and madam's ledger has been found. Whether this should give jurisdiction to assessing officer that they can initiate action against you under section 148. Under this deeming provision, they would have well within its rights, they will be well within their rights to initiate action against you, because it is a deeming provision. It does not say whether you have, whether this document reveals any income has escaped assessment or not. It would be deemed that income has escaped assessment. So this nature is arbitrary. Now we have created another thing. Now we would be reading it with reference to explanation 2, 1, 2, 3 and 4 read with proviso. We would be concluding by that, madam. See, in the first explanation 2 clause I, it refers to searched person. Clause 2I refers to survey. Clause 3I refers to non-searched person in respect of whom money, bullion, jewelry has been found. Clause 4 refers to in respect of person in which books of accounts have been found. Now we will be reading 148 capital A. We know that in cases other than these searched cases, 148 capital A has to be followed by the assessing officer. Now this proviso says that it is A. If it is a searched case, you need not follow 148 capital A. If it is a case where bullion has been found, money has been found in case of a non-searched person, you need not satisfy the provision. Then it says assessing officer is satisfied, then books of accounts have been found, then you need not follow 148 capital A. When there has been information under section e-verification scheme notified under section 135 capital A, then you need not follow 148 capital A. When it comes to clause D, it is fair enough that you have already made an verification under e-verification scheme. You need not make an inquiry again before issuing 148. In respect of search person, it is fair enough that you need not give opportunity under 148 capital A because you have already recorded reasons before initiating search under section 132. Now when it comes to clause B and clause C, when there has been money and bullion found which belongs to third person, now you have actually found some asset which belongs to third person, so you are fair enough that you have a reason to believe that this money and bullion belongs to third person. The third person or third party's case should be reopened under 148. You are fair enough. Now when it comes to clause C, where only books of accounts have been found, so whether this should give jurisdiction to assessing officer without following the procedure under 148 capital A, whether this gives jurisdiction, whether this should give jurisdiction. This is giving jurisdiction, act is giving jurisdiction, but whether this should be given jurisdiction when you see in the explanation 2 we had survey. Even in case of survey, that procedure under 148 capital A has to be followed. Though in that case it was deemed as if income has escaped assessment, despite having deemed information, the benefit of 148 capital A was there. But in case of a non-search person who has not been surveyed, no money or bullion has been found in his case, only an information has been found, only some document have been found, which may be verified, which may not be verified, which may be dumb, which may be non-useful, yet he is denied the benefit of 148 capital A. How far it is fine? Isn't it arbitrary to single this non-search person out? Law is equal protection to all. So unequal should not be treated equally. So how can a non-search person falling under the category proviso C, read with explanation 2 clause 4 to section 148, be treated equally with respect to explanation 2 clause 1 person, that is the search person? So these are certain issues which I have tried to pose before the Honorable Delhi High Court. So hope so, madam. आप
Sir,
भी
there is
वहाँ
one
पे
question.
हाँ madam, yes madam.
Like Sriram Agrawal just has written, assessee has sold one land worth 77 lakhs on 7th December 2021, and he has neither acquired any property till the due date of filing the return under section 139(1), nor he has deposited the amount in the capital gains scheme. Now he has acquired flat worth 47 lakhs on 17th June 2023. Whether he is eligible to get any exemptions under capital gain?
See, madam. Now, when it comes to return of income, now he has claimed benefit under section 54F. He has sold a plot, no, or so 54 or 54F. If he has sold a house or something, whatever the case may be,
Sold one land.
land, no, 54F. Now he is claiming
Correct.
exemption under 54F. So, and he has purchased it on 2023.
Yeah,
So,
20.
December 21, 22, December 23 would have been the limitation period as per 54F. And now he has purchased it before the end of the limitation period, within 2 years. So, when it comes to return of income, he has not claimed that deduction or exemption under 54F through return of income because he has not filed the return even within the limitation period. But he has filed it, but he has actually applied it for the purpose for which it is slated. So the Karnataka High Court in Ramchandra case has said that we have to go by the object of the legislation, not by the procedural lapses. Though it would be difficult for him to justify it. That when 148 case would have been coming up, he would be filing a return. He can claim that time, or if he wish to take ITRU route, he can take that route. But that would be very difficult because assessing officer would not mind. But there is a case law of Karnataka High Court and various high courts which says that since he has substantively complied with the provisions of the law, benefit should extend to him.
Okay, sir. Noted. Thank you. There is one. There are few questions from the GST angle, but I think Nitin sir, can you hear me? Maybe I think he's not there. So thank you so much. So I think we can conclude. We are on time. Members, if you have any questions for the direct text, you can just write it down.
And
I think
madam,
we can wait for 1 minute, and after that we can conclude.
if they don't have any doubt, that means they are more intelligent, madam.
No, it may not be like that, but
It is, madam. It is. So I thank you, madam, and thank you, CPE committee, for providing me with an opportunity to offer some of my views. Though my topic was recent development, but I majorly touched upon the theoretical aspect with certain small things, latest development. So hope so if we get another opportunity, madam, then something more.
Definitely,
Okay.
sir. On behalf of CP Committee ICI, I express my heartfelt gratitude and thank you to you for sharing your expert knowledge and also for delivering your insightful knowledge on various recent judgment from the Supreme Court, High Court, and how to calculate and different terminology in this scenario. So once again, I thank you on behalf of committee. Thank you so much, all the participants, for your passionate listening and your sharing your ideas, inputs, and questions around it. Thank you once again. Wishing you all the pleasant evening and happy March ending to all. Thank you.
Thank you.
Thank you once again. Yes.